Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Although the July monthly bar closed outside the previous 4-month range, there is change on the larger time frame because as you can see on this chart on the left, we have stopped the weekly one-time framing and this leaves a potential monthly excess at the top of the chart, which if confirmed will see a re-entering of that range and extension downwards. You can see on the daily that the fact that yes, there was a strong move to the downside, but there was also a strong bounce from near the month lows, which is the 2960 area, leaving a very strong excess on the profile and potential daily excess. This obviously has to be confirmed, but if this excess, which is very big, stays there and we start trading in this upward, there's a chance that at least for the time being, the downward movement will be paused. If we go to the market profile, we see how after a relatively muted morning, the real move accelerated after the Tuesday's excess was erased and the market cut like butter through the weak structure that was in place. Remember that all these lows were weak, and as you can see, we've been talking about that for a long time. It went through it just like butter. There are three important things to highlight. First of all, we kept a double distribution for the day, and that's important because that maintained later in the session the pressure downwards. Uh, However, there was number two, there was significant give back, retracing more than half of the move. Actually, that bounce came up all the way up to almost 3,000 from 2958 or something like that. That's a huge bounce. So not surprising to see the excess created, and probably, very probably, there's a longer time frame money involvement there because the magnitude of the giveback was huge. And number three, we settled back above the key 29.7575 level, which is above these three key lows. We settled back above there, leaving the excess in place. So the immediate focus is on value development relative to the lower distribution for the session, which is very wide. Sorry. If we start erasing this excess, that will denote change, and there is potential for continuation downwards. Given two things, the larger time frame situation that we just mentioned, we will be re-entering the previous 4-month range. But the other important thing is that below this low, which is 29.5525, if I scroll to the left, you see that that level is already weak, it's a weak low, and the structure down there is weak low after weak low after weak low and very close to the previous FOMC low. So if we start erasing that excess and accepting below today's low, there's a good chance that the downward move will continue. On the other hand, seeing the double distribution that we left today closed will also denote change to the other side, and at least will signal, as I said earlier, that the market will enter in balance. And to be honest, if that is the case and we trade back up above the 3,000, leaving this excess down here, that adds a little bit to the possibility that we can rotate back up. Remember that the volatility today was in part of a little bit of market disappointment, but at the end of the day, we still have the other market driver, which is the trade talks, pretty much on. So we still need to know what will happen on that front, and that could be the catalyst to either reverse this or continue. As we always say, anything can happen because odds are just odds. And remember, You don't have to trade. You just need to wait and monitor the market. And also remember that we have another key risk event on Friday in the form of non-farm payrolls.